Nvidia is a $120 billion cash machine no one is auditing, and they just dropped their 2026 annual report, and the top line numbers are staggering. While the retail crowd is obsessed with the $215.9 billion revenue print, value investors are looking at the velocity of the business. Is Nvidia just a hardware company or a capital compounding monster? I use GeminIQ to audit the raw 10K to see what's happening behind the AI hype curtain. Most people think Nvidia is just a growth play, but on GeminIQ, we track the capital return strategy. Unlike other tech giants that dilute you to the moon, Nvidia is actually shrinking the pie to your benefit. Basic shares outstanding dropped from 24.5 billion to 24.3 billion. We don't just show a buyback headline. By looking at the raw basic shares outstanding line against net income, you can see that management is using their massive $120 billion profit to aggressively retire shares, increasing your ownership stake while everyone else is looking at stock charts. In hardware, inventory is death. If chips sit on shelves, margins collapse. I use GeminIQ custom table to audit Nvidia's inventory turnover. Inventory turnover is sitting at 3.97. Despite scaling revenue to $215 billion plus, Nvidia is moving product almost 4 times a year. They aren't just building chips, they're shipping them as fast as the silicone can cool. This is the hallmark of a dominant moat. Is the capital being used wisely? We use the Visuals tab to check Return on Invested Capital, or ROIC. Nvidia's ROIC is a mind-bending 66.8%. Management is turning every $1 of capital into nearly 67 cents of profit. This is elite tier efficiency that justifies a premium valuation. If ROIC stays above 50%, the Nvidia machine is fundamentally indestructible. Should you buy the all-time high post-filing? I checked the earnings market reaction map for Nvidia's historical 10K filings. Historically, Nvidia shows a high month 1 volatility following its annual report, often followed by a consolidation window in month 2. The data suggests that the initial 10K hype often creates a short-term price spike. Waiting for the 20-day drift historically provides a better entry point with a higher margin of safety. Most financial websites rely on third-party aggregators that simplify or process data before you ever see it. We built GeminIQ because we believe you deserve a better fundamental analysis tool, one that goes beyond basic price charts and process numbers. We extract our data directly from SEC 10K and 10Q filings to ensure that when you look at a balance sheet or a cash flow statement, you're seeing the numbers exactly how the company reported them. Our goal is to give you the tools to verify the narrative for yourself using clean, traceable data. Research faster, invest smarter, GeminIQ.com.